Hey guys, Tarek Backus here with Whole Net Worth, and today in this video I just want to talk to you about the pros and cons between investing in stocks versus investing in real estate. And I'm just going to go through, what I think are the benefits and what I think are the drawbacks in each one. I really do think that both are great. I started investing in real estate and stocks in about 2011, so it's been about 8 years now, and I've been pretty successful at it. I'm not anything amazingly rich or anything like that, but I've been able to get solid returns year over year, and I've been able to add as I've grown. So I have 3 properties right now. I have a stock portfolio that is in the multi 6-figure range, and I've been able to do that by starting small and growing it year over year. And also, obviously, if you're investing, making some sacrifices here instead of spending your money today, investing it for tomorrow in the future. So I'm just going to go through a little bit of the pros and cons of both, and we'll get right into the video. So I'm not sure if you guys can see this, but I have stocks here. I have the pros, the cons. I have real estate here, the pros and the cons as well. And I'm not sure if you can read my writing, but I just pretty much wrote it down to help me, remember, what I want to say. So stocks. Okay, I love stocks. And one of the reasons why I love stocks is because it's one of the best ways to diversify your portfolio. You can do that with ETFs. And what that allows you to do is, for instance, I use an S&P 500 ETF, the Vanguard. Everybody talks about it. And I have some funds in there. And that allows me to invest in the top 500 companies in the United States. And the likelihood of all those 500 companies going bankrupt is very small, if not impossible. So I know that I'm invested in very solid companies, very huge companies, and I'm just going to get that average return. And historically, the S&P 500 has done about 10% before, I think 10 to 11 before inflation, and after inflation it's about 7 or 7.5. And so obviously history doesn't tell you what future performance will be, but it is a good indication and a good a range or thumb mark of where you might be. One of the things about stocks, I said zero work here, but maybe minimal work is the right thing. There's not much you have to do. Once you've picked a solid company or an ETF, especially with an ETF, you can just set it and forget it. But once you've picked a solid company, really there's not much you have to do other than monitor your portfolio every year and rebalance. So, if you've made a lot, you might trim some of your position in that so that it's down to a certain percentage and invest the excess funds into something else. And if you have more money and that is down, you might want to invest more. So, I would really, look at the company at the end of the year, see how they're doing, look at their financial statements. I think if you're going from ETFs where you don't really have to do anything because it's kind of like a mutual fund and it's, invested in, a range of companies, when an individual company, you're really investing in a business. And I think if you're a part owner of the business, and that's the way Warren Buffett says to look at it, and that's the way I look at it, is you really want to kind of keep an eye on your business, your investment, how's it doing. So a really good thing to do is keep track of that company. For instance, I'm invested in Apple. Sometimes I walk around the store, see what's going on, see how busy it is. I know I walked into the store the other day. I talked to one of the sales associates or the reps there, and they said, the AirPods, they keep selling out. They sell out of them every day. So I thought that was a good sign, and it was good to know. And then I look at their financial statements. So that does take a little bit of work. I think it's important to do that. So, it's not zero work, but a couple hours here and there at the end of the year or every quarter is not that much to spend, knowing that your money's making more money for you. Less capital. You don't need as much capital as you would, let's say, real estate. Real estate, you need tens of thousands of dollars sometimes to get in, to put a down payment for closing costs and having some contingency aside for maintenance and repairs, which is what I recommend. But with stocks, you can get, into an ETF, for $45, $65, and, your money, that money is making money for you. It's going out there and it's earning and it's invested. So you don't need as much capital, and it allows you to build more capital using very small amounts of money. And that's one of the reasons why I love it, especially when you're getting started. You can use registered accounts. I'm in Toronto, Canada, so you can use a tax-free savings account. You can invest in your RSPs within stocks, and if you're in the States, I think it's your 401k or your Roth IRA, and you can invest and have your money tax sheltered. So that means that any income that you make is going to be sheltered from the tax man, and you're going to be actually earning more income after taxes than for example, if you were to use real estate, because any income that you get from real estate, you're going to have to file taxes for. So that's one of the big advantages of the stocks, is that you can maximize your registered accounts. Liquidity, it's really liquid. If you have a big company like Apple, Disney, they're trading millions of stocks every day, and they're converting hands, so it's easy to buy and sell on a daily basis. However, if you're into real estate, you're gonna have the property, you can't just pick it up today and sell it tomorrow if it goes up. So that you're gonna have to hold on to that for some time. So this is one of the good things about stocks, is that you can get in, and if you want to exit, you can exit pretty quickly. I don't recommend trading. I don't have enough experience in it, and I kind of like the fundamental way. Maybe later on, as I understand a little bit more about options, trading, calls, and puts, I might say use a little bit of your capital to do that. But I'm with the philosophy that you want to build a good foundation of solid investments, and that means being an owner of a business, looking at yourself when you're investing in a stock as an owner. So yes, it's liquid, but I would say invest in a good company. However, if you want to sell that company and you don't want to be an owner of that company anymore and you want to move on, then the good thing about stocks is it's liquid. Okay, so I've talked a little bit about the pros of stocks. I'm going to talk a little bit of the cons, and I probably mentioned them already. But volatility. The stock market is very volatile. At any given point in time, you could lose 50% of your portfolio just by the market moving up and down, by people's reactions to what's going on in the news. And, it's something that from a psychological perspective, you have to be really disciplined to know that if the market goes up, shoots up, or it goes down, that you can't overreact. And that's what happens usually when you overreact and you follow the crowd. That's where the losses come from. So if you're invested in a good business and it's earning money and it's selling products and services, no matter if the value of the company is higher today versus tomorrow, then you really should hold on to the company. It's like what Warren Buffett says. If you have a house today, let's say you have a rental property and it's giving you $500 a month in income, but tomorrow it goes down in value by $2,000, you're not going to sell it, right? Or if it goes up by $2,000, you're probably not going to sell it. You're going to hold on to it, and it's going to earn you that $500. And later on, when you don't want to own it anymore, then you may sell it. Control. The cons about stocks is you really don't have control. Once you've given your money over or you've invested in the company, you're really giving your money to somebody else to manage for you, or you're investing in a company that's managed by somebody else. Yes, you're a shareholder. Yes, you get to vote, but there are so many that your vote really is not going to make too much of an impact unless you are heavily involved in it. So you have very limited control of how the business is, and that's why you kind of have to monitor what's going on. And that's one of the cons to me, is that I'm investing in something else and I have very little return. Very little control. And the risk of investing in bad companies. If I don't do my due diligence, if I don't really research the company, then I'm at risk of picking something based on feeling, and I couldn't be investing in a really bad company. The other thing is, I could have done all my research and I could have invested in something, and then for whatever reason the company doesn't do well. Their habits shift. Instead of liking, I bought Kraft Heinz, thinking they had good products and that those brands were very strong brands, but habits of consumers have been changing, and they've been going to more organic foods and more boutique products, and we've seen that Kraft Heinz also had a big problem with their management and some fudging of the books, or not disclosing their accounts correctly, and I've lost 50% in that position. Granted, it was a very small position, but I still lost about 50%. I'm going to hold on to it till it goes back up, because I think those brands will still do well over time, but that's one of those risks that you're taking. And that's basically it for stocks. So that I can think of right now off the top of my head. But I do think stocks are a great way to get into it, get into the market, get into investing, especially if you don't have a lot of money up front to start with real estate. Now, with real estate, I'll give you the pros. So the pros are potential for higher returns. Now, this is going to be, if you were to buy a property outright, the returns actually, when you calculate them, are actually lower than the stock market. But the key is with real estate is to use the bank's money. So if I put down a certain amount and I use the bank's money to fund the rest, whatever I put, that 10, 20, 30, 40,000 down, that is my investment. And whatever I earn on that investment becomes my percentage return. So for instance, if I put 20,000 down and I earned 10,000 in the year off rent, roughly 800 a month, then that's a 50% return. And I didn't even factor in appreciation of the property if that happens. But that's how those are powerful numbers that you can get to with real estate if you leverage. And it's very rare. I mean, you can get those returns in the stock market, but I think you're taking a lot of risk, and those are a lot of risky companies, and sometimes you're just guessing, and it's a lot of speculation when a stock goes up by 50%. So it happens. It goes up more than that too, but in a year span, real estate, you can do that with leverage, and it's very low risk because you're holding a hard asset. And that's the second point, is that it's a physical asset. It's a building. You know that you own this building, and even if you were to sell it and the property were to lose value, it's going to hold some sort of value because it has value to the marketplace. People need a place to live. If it's a rental, you know that there's a rental market for it. So that's one of the great things about real estate, is it's physical. You can see it, you can knock on it, you can touch it. And that's one of the reasons why I love it as well. And it's one of the basic needs. Everybody needs a place to live. So, with businesses, you might be selling products or services that you don't really, people don't necessarily need. They might be luxuries or they might be wants. Real estate is a need. You need a place to live. You have more control. As a real estate investor, you can control your expenses. You can control, to some extent, who goes into your property. If you're managing yourself, you can control what types of materials you use, what contractors, the cost of those contractors, and you just have a little bit more control of how your investment is doing. And I look at real estate as like a little mini business. You can operate it like a business, and you can have control over it. And that's one of the things I like about my real estate properties, is that I have control over, one of them or two of them I have a property manager, but one of them I have full control. And even the other ones, I have control over them. I can tell my property manager, I want you to do this. I want you to look after this instead. Or if I'm not happy with the services I'm getting from my property manager, I can look for somebody else. And if not, I can take it over. So I have that kind of control. I can make those decisions, and I like that. A lot of the times, though, with those decisions, you have to make them, and some people don't want to, but you do have control over it. Stability. Real estate historically has been one of the biggest generators of wealth for people over the years, and it's going to continue to be that way. Like I said, everybody needs a place to live, and real estate is one of the most stable investments that you can have. And it's been shown that people have built massive amounts of wealth over owning real estate. And you can look into that even more, but just the stability, it's not going to be as volatile as the stock market. If if all the houses on your street are selling for 400,000, it's most likely that it's not going to drop too far from that. It may not even go up too high from that. And if it does, it's going to take a long period of time. It's slow, it's gradual, and it's not volatile. And that's good to know, because if you want to sell it 2 years down the road, it's highly unlikely that you're going to lose 50% of what you put into the property. And leverage. I know that you can actually leverage stocks with margin accounts. I'm not that familiar with it yet. I'm still learning about it, but I don't subscribe to that either. But with real estate, you have that opportunity to leverage. So, as your property increases in value, you can pull some of that equity out, and then you can use that to invest in other properties. And that's how my actual first property allowed me to get my second too. I bought my first property in 2011, and about 5 years later, it had increased in value. So what happens was I took a line of credit against the house, and I pulled that equity out, and I had money in my account that I could use, and I had to borrow it against my home at a certain percentage. I used that money to go purchase another home and renovate the basement and turn it into a duplex, so it had 2 units in it, and the rent from that I take and I pay back the loan that I used. So that's how I'm able to take money that's sitting in the house, value equity, and pull it from it and take it and increase my returns by investing it in another income producing asset. And I think that's one of the most amazing things about owning real estate. The cons about real estate, and I talked about this already, is more work. There's a ton of work. Maybe I shouldn't say a ton of work, but sometimes there can be a ton of work. There is work involved. And whenever you get more returns, generally there's going to be more work. So if you're willing to take on a little bit more work in terms of, you have to do your taxes, you have to manage the property. If you're not, you're going to find a property manager. You're going to make sure you got to manage your property manager. Then you got to keep your receipts. You got to file your taxes. Maintenance or repairs, you're going to have to make sure money's in the account. You're going to have to manage the account. Like I said, you have more control, but now you have more responsibility. So, that's one of the cons with dealing with real estate, is the amount of work involved with it. Tenants, maintenance, and repairs. So maintenance and repairs falls into the work category. But tenants, you might be at risk of having bad tenants. If you're managing the property, you're going to have to deal with tenants. You're going to have to deal with the personalities of the tenants. They're going to call you at different times. They're going to tell you they need this. They're going to tell you something's broken. You're going to have to deal with it. You're going to be at home sitting down eating dinner, and a call's going to come in and it's going to say that, this is broken. I was at work the other day. My tenant called me and said, I have ants in the house. There's carpenter ants. Today, this afternoon, I was with pest control having the property sprayed. So, these things happen. You have to be ready. You're going to have to know things like that. You're going to have to be able to find contractors, plumbers, electricians for when those repairs happen. So there's the work, dealing with the tenants, and the risk. If you have a bad tenant, how are you going to deal with them? How are you going to get them out? To be very honest, I've had about 6 or 7 tenants within my property, and I have not had a bad experience. I've had fantastic tenants, and I've gone through a system and a process that has worked for me. And maybe actually in videos in the future, I will go through that process of screening tenants and what works for me. And I've been very lucky, but I followed that system, thoroughly. And it has worked out really well. So I think if you follow a really good system, you can get tenants depending on, where your house is. Obviously, if your house, is in a lower income neighborhood, you might have, not the greatest tenants, but everybody needs a place to live. You just, depending on the income level or demographic of that person, you just want to find the best people that, even if it's lower income, they're still going to pay you on time. They're still going to, let you know when something's wrong with the property. They're not going to be irresponsible. And that's the main thing you're looking for. But there is that risk there. And like I said, real estate is not liquid. It's not, something that you can buy today and really sell tomorrow. If you're going to sell your home, most likely it's going to sit on the market for a few months before you get any offers. When you get some offers, you're going to have to negotiate before you come to an agreement. And just a little bit of a disclosure here, I am a real estate agent as well. I work full-time and I do real estate on the side, so I'm not a full-time agent, and I don't specifically endorse real estate over stocks. I love them both. I'm just giving you the pros and cons, and I really do think real estate is great as well. But it is not liquid, and it's something that if you're going to invest in and you're going to put money into it, a few $1,000s, couple of hundred, tens of thousands or hundreds of thousands, it's going to be in that property for a few years. That's the way I would look at it, because it's not like you're going to put it in, it's going to go up by 10, 20,000 and you're going to sell it tomorrow. So keep that in mind. It's really not liquid. The money that you're putting in, it's going to stay there. And the fact number 4, that's high capital. You're going to put in a lot of money, and it's going to have to stay there. So you're going to put it in. You're going to invest in real estate, and it's most likely that you're not going to sell because it's not liquid. So you got to look at it like, I'm putting this money aside. I'm investing in this property for a longer time horizon. However, having said that, I also do recommend that with stocks. If you're investing in stocks, you should look at it like you're putting it away for 3+ years, because in any given moment, the stock market can be volatile. So you know what? Now that I'm thinking about it, it is similar, but you can't sell. Like, I can invest in stocks today, and if it stays and it doesn't drop, I can sell pretty quick in a day. With real estate, if I want to sell, I have to get an agent, I have to sign the documents, I have to market the property, I have to put up the property, and then I have to find buyers, and that takes a while. So you got to keep that in mind. Hey guys, so I have to apologize. My video cut out because I ran out of space on my SD card. So I actually have to go buy a new SD card and film this second portion of this video. I guess I was talking too long on the first. I think everyone should have a real estate investment and a stock portfolio, but if you can't do both, at least you have to have one to grow your wealth and be able to do the things that you want to do and live your dreams. So definitely like and subscribe to the channel. I'm going to grow it, and definitely do leave your comments if you want me to create any videos on any other topics.